The all-important G20 meeting coming up later this week. What about Bill Shorten? Can you make money out of his unusual economic policies he's proposed? And finally, is there a stock that Paul Rickard hated but now likes? I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
All right, Paul, let's start off with the G20 meeting. President Trump versus President Xi Jinping. That's correct pronunciation, by the way.
I'll leave that to you, Peter.
Yeah, well, it looks like Z, but it's Xi, apparently. Now, but Paul, if they actually crack a deal, do you think stocks go up? If they don't crack a deal, do stocks go down?
I think that's the way to call it, Peter. The market hopes they're going to crack a deal, at least take the tension away from it. They may not get a deal, but at least I think any negativities would be, more noise, more threats from Trump. So maybe a no result is an okay result, but, I think the market's clearly hoping, and if they don't, then we're going to see more pressure, because that's the only reason that the US market has bounced. This is one of the big reasons why the sell-off and the correction in October and November has continued.
Yeah, because the tech stocks are really affected, aren't they?
Because of the trade issue. I mean, and you saw it overnight. General Motors made some announcements about closing some factories, and Trump tweeted that they did disappointed. They didn't help the voters in Ohio and a couple other states. And what about Mexico and China? So the whole trade issue is still out there in the market. The market thinks that common sense is going to prevail. I think the G20 is the next key test for it, and I think if China and the US don't hit it off at the G20, we're going to have trouble with our market.
Yeah, and Larry Kudlow, who is the economic advisor to President Trump, he was at pains to say there are key issues where China has to give ground, like, for example, they've got to stop stealing IP, which seems like a pretty fair request. They've got to reduce the...
They can agree to that, Peter, and of course,
that's right.
Carry on.
Reduce protection that was okay when they were a small economy. There are some reasonable... But you just hope that Trump says, we don't need a stock market crash. We need the market to turn around. I hope that is the result. Okay, that's G20.
Argentina won on Friday, and we'll probably see the impact on Monday, Tuesday in our market, I guess.
Yeah, without doubt. And I hope I'm not using the headline, "Don't cry for me, Argentina."
Got that one ready in your kit bag, Peter.
Yeah, I was ready for that one. All right, now, the next important one. Can you make money Bill Shorten's policies, like his negative gearing one and the tax refund banning for self-funded retirees? Can you make money?
Well, I think there's two opportunities, Peter. One, because the negative gearing is grandfathered, there's still an opportunity to think about, is it time to invest in the property market ahead of the change? Now, we haven't got a change date, but you've got to say the election now is odds on for May the 18th, so sometime after that date, the grandfathering will cease. And so there's probably still some opportunity, I think, to think about the property market in the next 6 months. The negative gearing is wider than property, but you won't be able to do it after that point in time. Interesting, you'll still be able to claim interest as a tax deduction, you just won't be able to claim a loss. So it's done on a group basis, so that's one. I think, as we've said at our income conference, I think the other investments that aren't franked are going to look a little more attractive, so there's going to be some opportunities there.
Like, for example, a foreign corporate bond fund. And there's one at our conference. It's the Newberg.
Yeah, the NMI Newberger. It's a global securities.
Let's get the name right.
Global corporate fund. We'll get the name right. I just can't think of the code, Peter. But it's a listed investment company. Look, I think there's some good companies out there paying reasonably attractive unfranked yields, and they're going to become a little more relatively more attractive. Yeah. I think the third opportunity you've got to say is where Labor government spend a lot of money. That's got to be good for some businesses, right? Now, it's probably not going to be good for the health funds because they're talking about freezing the premiums at 2%. But in the health I'm coming a day to day. They're going to spend a lot of money. Education, they're going to spend some money. So, one thing we do know about labour they spend, and there are a lot of industries that rely on government spending. Renewables too. There's got to be some companies that I think are going to benefit, not necessarily straight away, but in the medium term, from increased government spending.
I need to ignore the bell because there's one question. Because I was thinking, there's no point negative gearing a property inside a self-managed super fund because you're paying zero tax. But some people might think, well, I might draw 500 grand out of my super fund and borrow money outside the super fund and get the tax deduction there and hold a property for the rest of my life and hand it over to the kids when I die, and they pay the capital gains tax at a reduced rate, well, at a higher rate, because Bill's taking away the discount from 50 down to 25.
Yeah, I'm not sure that's the strategy I'd be looking at, but I
some
think,
people might.
But I think there are. I'm going to look at the property market.
Yeah.
I'll just give you, because I don't own a lot of property, but I think it's come off a bit. You know, I think could be a once opportunity.
And Paul, someone in their 50s before retirement could say, well, let's get a property for life. You know, and negative gear outside. So there's going to be a lot of people be thinking about this policy.
So it's not necessarily quite doom and gloom as people make out, but obviously, you know, the refund. And again, look, we still think, you and I think there'll be a change to the refund policy. This is the franking credits, but whether we'll get a little change pre-Christmas or whether we'll have to wait till after the election and then when it gets through the crossbench. But
we think there'll be a cap that some retirees will be able to get a tax refund up to a certain cap, purely for fairness reasons.
Yeah, I mean, look, a long way to go on that.
Maybe political reasons.
A long way to go on that, but certainly people are really worried, and the pressure is building. So you can imagine the pressure is building. There's going to be a lot of noise about this in the next coming months.
Okay, finally, you used to not like primary healthcare, and you wrote an article recently liking it. Tell us.
A bit like a courageous buy. I think primary's been a shocker of a company over several years.
Don't call it a dog. Dogs are nice.
Yeah, but
call it maybe
okay, I don't know. But
a rat.
Look, it's got a new management team. They said at the annual general meeting, the worst is behind them. All the problems they've had to do with not paying their staff the correct number of wages, issues in contracts with doctors, the whole lot of raft of other issues as the business was really allowed to sort of.
Bad management, wasn't it?
Bad management. Their key asset was their doctors and their people. They managed them badly. They got them offside. Whole lot of issues.
Doctors, not a good idea.
Have been found to have had a big cost for many things. Now they've got a strategy really just focus on growing the medical business again. Obviously, that drives the pathology business to some extent, driving efficiency. Yeah. Not revolutionary, evolutionary. This is a bet this is a bet on the management team. Look, it's at about $2.50. It was at $5 for many years.
Good point. Yep.
Look, it may be too early to buy, but I think it's I think it's one to watch. I have a little bit of
the healthcare sector is not a bad sector because a lot of people are getting older and they're overpaying for our healthcare.
Yeah, I mean, look, volumes in pathology is still growing and expect them to grow. I mean, the government's probably not going to increase the rebates, so it's not as though expecting to see a change in government, meaning, more money for the pathology services, but volumes are still have a natural tailwind, that is growth, and they can drive their efficiency from their back office and their collection business. And so I still think it's a pretty sound business. I'd describe it as a very low risk business, right? I mean, as long as you can get your doctors on site, the revenue flows through the door, right?
And the share price is at a good level as an entry point. You might not make money overnight, but it's probably over the medium term. It's probably
have a look for the long term. Just my only scepticism, of course, is that management has been found wanting in the past.
It's new management, you say?
And it's a new management team, so that's the sort of...
Okay, Paul, we won't hold you responsible if it ends up being a rat, not a dog. Okay, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
Content has been prepared without taking account of an individual's financial objectives, needs, or financial situation. It does not constitute formal advice. Before acting, any individual should consider the appropriateness of the information, having regard to the individual's financial situation, needs, and financial objectives. Past performance is not a guide for future performance. AFSL 286531.